I know all the attention's on the Fed. I've been watching Europe. You got China increasingly in disarray. What are you and your team most closely watching right now?
Well, most closely, it's still the Fed and U.S. inflation. I think that kind of leads the world markets. Obviously, there's idiosyncratic issues in Europe to keep an eye on. China cutting rates, even if it's slightly, does seem a little bit ominous for global growth. But it kind of starts and ends with the Federal Reserve and what inflation on the U.S. side of things looks like. So to your point, we're watching Powell closely at the end of the week. We expect him to strike a slightly hawkish tone. I think they're going to want to continue to jawbone inflation at least until year end. I think probably some of this talk about a pivot, some of the rally in equity markets has Fed governors a little bit on edge. But yeah, it starts and ends there, and that's what we're watching closely this week and in the weeks to come.
Powell's the epitome of the two-handed economist. Well, but on the other hand, I mean, every time he goes hawkish, he kind of adds like a dovish layer of frosting to it, does he not? Just so he maybe, I guess, can be right no matter what the ultimate outcome is. If he does turn a little more dovish, Ross, meaning they won't hike rates maybe as aggressively in the next couple of meetings as the market thinks, is that the green light to buy stocks?
So I think a distinction here is really important. I do think that if they continue to hike rates, continue to be a little hawkish about inflation, but maybe slow the pace as QT ramps up. So you kind of have on one hand slowing interest rates, but on the other hand, quantitative tightening ramping up. I think that's fine. I think as long as they keep inflation front of mind and fighting that battle, I think investors can feel confident, probably to leg into stocks. You know, you'll get some volatility, but I think the green light is there. If they cut rates next year, I actually think that's a bearish outcome. So for a long time, markets have been pricing this pivot, not necessarily of slowing the hikes, but of outright cuts next year. To me, that seems like a bearish outcome. I think they're only cutting rates if something dramatic has happened to the economy, whether it's a recession or something geopolitical external hits us. So if they start to just slow up, let quantitative tightening maybe take the baton a little bit, I think that's fine. I think, you know, it's not going to be necessarily totally risk on for equities, but it is a sign to me that they think the economy can handle these rates and that they're not going to pivot at the first sign of pain.